What is going on, everyone? How are you all doing? This is Yix here at Magnum Crypto, back again with another video. In today's video, it's going to be a quick market update. There's been some changes in the market, some movements, so let's start this video and get the show on the road. So we're just going to be covering Bitcoin, Ethereum, Cardano, and Ocean. So as you can see, I posted this chart on my private Telegram group. Link for that is in the description. On the 2nd of March, as the recovery was happening, as you can see over here, we bounced from about 44,000 after wicking down to the Fibonacci levels. After this nice low was created, I plotted a Fibonacci up until this point, actually, not that, up to this point, to see where it could possibly retrace to, because I still think there is a possibility that we will recover up to this point. This is what I said at the time, and then potentially go further down to the next level lower at around 42,000, potentially down to 38 to 40,000. Now, lo and behold, what happened was there was some consolidation here. What I mentioned in the previous breakdown was this looks like a potential flagging structure. So if it breaks to the upside, then we could see the 0.5, the 618, or up to the 786 level, and hit those levels perfectly up to the 618. Now, it's still possible that we'll hit the next Fibonacci level at the 786, around 55k, and then we start going down. And the other possibility is that the correction is actually over and we're going to start making new highs. If that is the case, then what we need to see is for price to carry on going upwards and to make a new high past the previous high created near the mid to end of Feb. However, if, as I am predicting, the more likely outcome is that we will get potentially a bit closer to the previous high and then reject and then start tumbling down. And the lowest target would be around the 38 to 40k region. So we need to keep a level head and just not get too excited by this run and wait for further confirmation. Now, as I said, the confirmation that we need to see for us to confirm that correction is over is to go past here. If we turn around from this point and start going lower and maybe close with a weekly candle around this level, then I think for sure we're going to end up going further and further down. So let's see how that continues. Moving on to Ethereum. Now, Ethereum actually did bounce quite nicely from the previous high at around 1400. Same situation as Bitcoin, however, and that's the fact that it's still a little bit off the previous high. Now, if it makes a new high and potentially uses this as support, then that would be a bullish indication. However, it seems to be following Bitcoin quite closely. So perhaps whatever Bitcoin does, Ethereum is going to follow. And if Bitcoin tumbles and fails to make a new high, then Ethereum may follow suit. Now, the rest of the market looks like it's rallying as well. Some notable gains from Chiliz, which is an NFT platform, Terra, Ravencoin, Near, PancakeSwap is back at it again, and a few other cryptocurrencies. So the market in general seems to be trending up. As you can see, the market cap has increased by 6.4%. Now, let's have a quick look at the market cap before we move on to Ocean and Cardano. So one thing about the market cap is we've just crossed that $1.5 trillion level and we're getting close to the previous high. Now, of course, this coincides perfectly with Bitcoin. The fact that Bitcoin makes up the majority of this market cap is probably the reason why we're getting close to previous highs. And if Bitcoin tumbles, then of course we will shed some gains as well. Maybe down to the lower end, 1.3 trillion, or down to the wick of 1.27 trillion. So moving on to Cardano. As I mentioned in the previous video, this looks like a rising channel or a rising broadening wedge. And for me, this looked like it was going to head down because it's already gained so much in the last few weeks. Seeing this kind of rising pattern, for me, it looks more bearish than bullish. And what's happened now is it's broken below this lower trend line, and that's now retesting that trend line as resistance. So it's going in line with, you know, my prediction of a potential break to the downside. If it's not able to break back above this, then that's the likely outcome. And the next support levels would be at first 95 cents and then below that 84 cents. Now, of course, it is possible that it will break back above and continue its rally. If that is the case, then this upper trend line would take it above the wick of 150, potentially up to 170 at, or 160 at the highest. But as I said, for me, the probability is more that it's going to break to the downside. But let's see how it goes. Another crypto that was shown an interesting chart pattern is Ocean Protocol. So it looked like this was some sort of broadening wedge as well, this rising pattern. From those lower end, it was a massive 50% rally, breaking above this pattern, and now it's testing it as support. If it's able to hold this level as support, then we could for sure see a rally towards between this wick and the $2 level. So we could break past this and head towards $2. So it'll be very interesting to see how this progresses. As you can see, it's testing this trend line as support, and it may break to the downside. So let's keep a close eye on this going forward. Medium to long term though, I'm very bullish on Ocean. The difference between this and Cardano is the rally was not as strong as Cardano's, so there's more room to the upside compared to Cardano. Let's have a quick look at 1inch protocol. Actually, it's been a small development. In my previous video, I mentioned that this looks like an inverse ascending scallop, and the key part is for it to hold that 0.5 level. The other thing is there was a descending downsloping trend, counter trend line. So when that's broken, of course, this is a bullish sign that it may start to go on a crazy rally towards $5.85 and beyond. So now it's actually closed above this trend line. What I would want to see is potentially a retest before going up, or just a straight rally to the upside. But what I don't want to see, of course, is for it to break below it and then end up going down. So it needs to make sure to remain above this area, above this trend line, and above that 0.5 Fibonacci level. So far it's playing out as I've mentioned. So that'll be it for this market breakdown. Just a quick one on a Tuesday. Hope you got some value from that, and see you in the next video. Peace.